Welcome back to Bootleg Macro, your number one source for stock market and cryptocurrency trends on YouTube. Today we're going to take a quick look at 20 to 2023 markets, specifically looking at volatility. Now, if we look back at the 2022 market for the SPX, what we can notice very quickly is that there was a trend, a downward trend. We can see right here with this black bar that the price has pretty much hit off that black trend line 4 separate times until recently now in 2023 when it's broken right through. What's most amazing about this is that as soon as 2023 was upon us, all of a sudden we got the reemergence of essentially the 2021 market. We saw candles going and looking like people were going to the moon. Carvana was up. People were buying cryptocurrencies. The boys were back in town. Now, what may be even more astonishing is the fact that as we've seen this complete transition back to a bull market in the beginning of 2023, everyone believes that there is a recession looming and that we are in a channel. So when you look at this daily action of the SPX, everyone believes that 4,200 is essentially where we're going to get stuck. No matter what we do, what the economy does, everyone believes that 4,200 is something we can't break and we're destined to go back down. Now, taking a look at what I think is probably one of the most important aspects of any stock is its volatility. Looking here at the SPX, this isn't an indicator of the VIX itself. This is an indicator that I've built for myself so that I can understand what's going on in the market from an underlying perspective. As I always believe, and as you should always trust, you never want to be looking at the same thing that everyone else is, because if it's consensus, there's no alpha to be generated. Help you understand exactly how this indicator works, I want to go back to the very beginning of 2022. I want to look at what this volatility was saying, because I think if you understand how volatility was signaling at the very beginning of 2022 exactly what 2022 turned into, this is going to help you much better understand what we should expect in 2023. So looking back at the chart of 2022, the very beginning, what we're going to be investigating is this square here. In that early January part of January and the beginning of February. You can see here I have it highlighted. We've got the 1st, the 21st, the 4th of February, the 18th, and the 3rd of March. Now we're going to zoom out a little bit to see what volatility and price correlation we're doing. So at the time you can see, so what you can see here is that the blue, which is price volatility, is falling, which means that the volatility of the asset itself, of the SPX, was falling after it had consistently been in the 60s during all of 2021. As we entered 2022, volatility continued to trend lower. It had started falling at the end of the summer, and it started to collapse as we entered into the back half of the year. Now what you'll also notice is that the red bars underneath the blue are rising, which means that at the time, price correlation to volatility was actually negative. Now, if you just think about it on a simple basis of if something is correlated to price and the correlation is rising while that other thing is falling, what does that tell you? That means that the price would continue to follow whatever the volatility was doing. So if volatility is falling and correlation is rising, the price is going to start falling. And the wonderful thing about this is that this is weekly volatility. So this is setting up for what is a long-term momentum shift in direction. So you know, just based on this, that you're going to very easily find that price should continue to follow the volatility downwards. Now let's take a quick look at the raw data itself so you can understand where this chart is coming from. Now as we take a look at what we see here, I've highlighted in this red box on the right side, specifically the volatility. You're going to notice that in the numbers, especially those that are going to be blue and light blue in lettering. Now what we're going to do is take a little bit closer look at what volatility was doing at the end of 2021. Specifically here we have the middle of September 2021 until the very end. Now if you look in that red box I have on the right, those numbers starting at 60 on that row for 9/17/2021, we can see that volatility at that time was at 60.489. Now each week underneath that, volatility continued to fall. Now we know based on looking at the correlation that correlation at the time was incredibly negative, so as volatility was falling and correlation was negative in terms of price, that meant that the price continued to rise. Now if we look at the very end of 2021, things started to shift. And the reason things started to shift was because correlation changed, not that volatility's profile had changed. Now let's take a look at what started to change as we got into 2022, since that's really the more important piece of what we're looking at here. I just want to give you some background as to understand where we came from at the end of 2021. Now we're going to zoom in here to the very first part of 2022, where we can see that volatility is still falling, but suddenly price starts behaving differently. Now, as we look at the transition into 2022, we do notice that volatility continued to fall, especially until we hit this exact bottom here. So what we're looking at here is the bottom in volatility. Now, volatility won't necessarily hit a bottom, but it is zero bound, so it can't go below zero. So when it hits that 13 there, that's the lowest that the volatility is going to find in this current sequence. And you can see that as it starts to bottom, that's when price starts to bottom. Now, looking back exactly, you can see that that is inside of that red square that we were just looking at, where it does bottom at the 13 and then starts to rise back up. The difference here, though, is that at least temporarily, the red bars are positive, so correlation to volatility is positive. So as volatility starts to rise, the price starts to rise with the actual volatility. And we can see that again based on the recent price action right after the 13th, right after the 11th in March. We started to get some rises right back from that 4,200 level back up to 4,500. Now, looking at what we see here, though, we'll notice that the correlation starts to fall as the volatility continues to rise. And that happens in the middle to beginning of April and May, and you can start to see that the price reflects that as the volatility starts to rise again from that 13 level on the 11th of March, all the way back up to 52 in the middle of April. Now, because correlation had started to fall while volatility was still rising, price started to have dramatic moves downward. We can see that between April 8th and May 13th, we saw a 10% move in the SPX downward, and that's all because of what you saw in volatility and correlation. And now that we've done this deep review on volatility at the turn of the year of 2022, now let's take a quick look at what volatility looks like today as we enter into 2023. Now let's go ahead and zoom in on the volatility as we see it today along with this price correlation. It looks eerily similar to exactly what we saw at the turn of the year between 2021 and 2022. Volatility has gotten crushed and correlation is currently negative. And what we see is that volatility is starting to rise while correlation is still negative. Now, if what we saw happened in 2022 at the very beginning is a precursor of what we should expect to see here in 2023, while the correlation is negative and volatility is rising, we would expect to see a downward move in the SPX during this first quarter. We're not sure how long it's going to last, but this is what volatility and price correlation are telling us at the moment. So now what we'll do is transition to looking at the raw data for the current market in the SPX, specifically around that volatility and that correlation. So you can see that we're looking at the volatility chart, but what I want to do is look at the raw data so we get an understanding of exactly where volatility is at the moment. What is price telling us? What we can see here in this red box is the price action of the SPX. We can see that volatility has continued to fall right there around the 13th, it was at 39%. And then on the 3rd of February, we can already see it's at 8 and now starting to rise again. And just to make sure we're clear, it's right there. That's the 8 that we see in that volatility, and that big bar right next to it is that 23. And that's a huge move when you think about it in a percentage terms, but this is just, again, how volatility works. If you use it as a zero bound where it can't go negative, it must fall down to the lowest level, then will continue to rise as the volatility changes. The question now is, what's going on with correlation? When we start to look at correlation here with the raw data, we can see in that column for HQ, that is the correlation if you look at it if it's falling or rising on if it's red or green. Now we notice that the correlation is currently negative 77. So if we have a negative 77 correlation to volatility and correlation is rising, or correlation is currently negative and volatility is rising, we would expect to see some major price movement downward. Now let's take a quick look at the sentiment indicator for the overall S&PX. Now, sentiment when it comes to the SPY is completely different. It's not based on volatility or correlation. What we're looking at here is the percentage of bullish price action over the recent weeks. Now, what we'll do is quickly look at the raw data here, and that's because the way that I do it is I like to use a series of averages to be able to smooth out what type of bullish activity and price action we see in certain stocks. Now, in this specific square that I have here, we can see that if we look at the 10-week, we can see that the 10-week bullish momentum is currently higher than the 23-week bullish momentum. When the 10-week is lower, that's when things start to really change and you start to get a feedback loop on price falling and sentiment even getting more negative. Now again, one of the things about this is that because you are using essentially a stochastic method, you're never going to see it go below really the high 30s, low 40s. You're never going to see it get above the high 50s and low 60s. So when we look here at what we have, we currently are at 48 on both the 10-week and the 23-week. So we'd expect to see a little bit of choppiness because this may be a spot where we start to bottom, or this could be the beginning of a waterfall decline, depending on however the market wants to treat the negative sentiment that it's receiving after such a move in the beginning of 2023.